Okay, just me rambling pretty much. I'm just gonna give you a real quick rundown of what I thought about your questions and stuff. And of course, know that it's so hard to explain to someone whom you've never met, and someone who you don't know how they live their life or how they think and what level of consciousness they're on. And I mean that in a good way, because not everybody perceives what we're doing in the same way. The learning how to trade, what trading really even is, or even what their goals are when it comes to trading. So I found it that it's sometimes it's a little hard, being able to answer the questions realistically and honestly, not your questions, but just questions in general when people have questions of trading. Sometimes it's just a little hard to do that if you answer them genuinely, because you want to answer them more specific to the person that's asking. So, of course, me not knowing you, I can only just give you some really general ideas of what helped me, when I was early on in this journey. And I still am early on in my journey. I'm in my second year. The last 5 or 6 months is when I've found consistency, and I've just been building skills up until then. I still, to this day, do not take big share size. I have never, not in my live account, I won't do it. And I say big as in I've never taken 1,000 shares of a market leading stock. I have taken 1,000 shares of smaller stocks, but that's very minimal. I'm still was only risking $50 on my trade. It was just my risk reward allowed me to risk that much. But anyways, I'm not going to get into that. I just wanted to tell you you're not off track. You're right on track. And with having a mentality, knowing that you had made a mistake and that you allowed, which I would assume a big loss, or maybe was that 400 that you lost out of the intro account, was that on multiple different trades, or if it was on one trade, I didn't ask. But you know something though, it's okay either way. You're learning this. You can't beat yourself up for not knowing how to properly, size into a trade, or how to even, and what to even look for. Gosh, that's like, there's no way for you to ever know that. When in Stelios's room, he is, I believe, his room is for a little bit more advanced traders than the people that are just starting out, because his course tells you how to really find the trades. And I'm telling you, being and doing this for almost 2 years and being in many, many, many different rooms and Warrior Tradings, I saw that on your thing, and I will talk about that at another time. But a long story short, he doesn't tell you the very basics, because I believe that his course is just a little bit more advanced than that. So the basics mean a lot. The basics are, how do we get into these trades properly so we can allow them to go the amount of time they need to go. Time and money are the only two things on a chart. So we have to always consider time, and we of course have to consider how much we're willing to risk on the trade. And without having like a course that really goes through that, but then not just that, but having one-on-one mentoring. So when you read something, you're interpreting it, or you watch a video, you're interpreting it in a certain way. But in real life, when you're experiencing, going through the experiences of seeing a trade and wondering to yourself, should I get in, and where would a proper place be to put a stop, doesn't always help too much, when you file through what we've read. What really helps is seeing someone do it firsthand. And I was very fortunate enough where I could pay for someone to show me that while they were trading, and it really helped accelerate my learning curve, because I was able to see someone executing trades in real time. And that really just, it made the world a difference to me. So I wanted to tell you that really quickly, because I want to always encourage people. And here's the thing, I never encourage people to start day trading, and never. When people ask me what I'm interested in, what I'm doing, I always tell them about my other businesses. I don't tell them of day trading, because I believe that you have to be a certain mindset and in a certain emotional place in your life for day trading to work for you for long term as a business. And a lot of people are not. So I only share the information I'm sharing with you because you're already interested in it. You're already in the room. You're already trying, and that's why I choose to share my information a little differently with certain people. So Okay, so as far as your first question, other live day trading accounts, absolutely. There are tons of them, but hear this. When you are choosing a broker, when you, not now, okay, right now you have to go through the learning process. Everybody's learning process is different. Do not let people tell you that it's going to take you 5 years to figure it out. It could take you 5 months to figure it out, okay? Everybody is different. It's taken me about a little over a year before I understood what I was doing to a point where I could make it real. And then I've had other people that were training with me that have been in it for 3 years and they have yet to be that. So just go, don't ever think of this in a forms of comparing your timeline and your success to other people, because trading is one of the only businesses that you will ever be in that, well, I guess all businesses are, but the main part of trading, you're really only bettering yourself. You're only competing against yourself. So, and that's really true, because you have no idea who is taking the trade against you or who you're trading with. And your success really should just be measured by yourself. If each day or each week, if you can start figuring out what your problems are and start making a process to eliminate that problem. So if you're having a problem with hotkeys, don't use them anymore. Start doing that. Start every day that you see yourself, and I do the same thing. If I find myself running into a problem that's repetitive, I will tell myself, okay, now what could I do? What measures could I put in place to make it to where I will not do that again? And that is what I do, so I stop the cycle of insanity, because trading is so counterintuitive to anything that we know or do as humans that it is very hard to break out of that cycle and realize that what you're doing is not working. And the reason why we keep doing things that are not working is because the way that we're doing them and that we're executing them in the ways of life, it would work for us, but not trading. So you just have to get into the idea and the mindset that trading is bizarro world, okay? Like everything that you do that will be successful in trading will be counteractive and counterintuitive to anything you do in life. So you just have to reprogram your mind, and it just takes a little while. So don't let it beat you. Do not let it beat you. Keep on going. If it's hard, do it hard. If it's worth it to you, just don't let any excuse, there is no excuse that will ever allow you to say that you can't do it. That's what I tell myself all the time. And I've gone through this is my second student account, and I've been able to hold on to it for 6 months, and I'm actually building on it. But I lost 3 intro accounts, and I paper traded for 6 months which I would have lost. Hey, if I was in a live account there, I would have lost that money. So, we all go through the process, and I believe that if you keep a strong mindset, and this is something that you really want for yourself, as long as you never quit, you won't fail. And that's something you should just keep in mind. Also, really, really important, and I feel this to be one of the most important things that someone told me that I'm happy that I followed in my beginning part of my journey. So you can't set out to think that you're going to make money right now. You're not, okay? I'm sorry, but you will get lucky, and I say get lucky because right now at anybody's early stage, before you really understand setups, you're taking a guess and you're just getting lucky. Everybody will get lucky and you will have winning trades. In order to stay consistent, you have to train your mind and your brain to see patterns and act on them accordingly. And until you can do that, any money that you put in a live account, you will lose. You will lose, you will lose, you will lose. There's no getting around it. You will lose it. So you can paper trade. So if you get in the mindset, the reason why you don't want to paper trade is because you don't want to miss out on money. Well, here's the thing. You're going to lose the money. Don't even think that. The money is gone. You will not keep any money you put into an account until you have learned the patterns. So learn the patterns paper trading. When you get the patterns, and you can actually get them when you're in the market and you're looking and they just come to you, and now all of a sudden you're seeing them. So then when you're seeing them, now's the time where you have to learn how to execute them. And you have to say to yourself, yes, I see the pattern. But is this pattern a plus setup? Is this something that has a lower probability of working even though it's that pattern? I can get into that with you another time. And will allow you to assess the difference between whether you take 1% or 2% of your account. And I mean that as if you have a max loss of $5,000, the most I would risk on a trade is $50. And if it was an A plus setup, I would risk $75, which means you're only going to make $100 to $200 a trade. Risking that amount of size, you're not going to make a lot of money. But the thing is, you have to build up on the share size. You cannot just go into trading and take a huge size because you want to scrape and make money. You're just going to blow out your account doing that, because trading is just a game of probabilities. Okay, bottom line, that's all it is. You are speculating and guessing on what a price will be based on a pattern that tells you that there is a certain probability that that pattern will show up. You have no idea who is taking the opposite end of the trade. You have no idea why they are taking the opposite end of the trade or why they are going in with you. So really, truly, all you can do is tell yourself that you're taking a guess on what will happen. What will help you psychologically is knowing that when you go into a casino and you put $20 in that machine, you do not get pissed off when the machine doesn't pay you out. Well, you do, but you know what I mean. You don't walk out and say, oh, God, I fucked up. No. The machine just didn't pay you out at that particular time. Why? Because it's a game of probabilities. You must think of trading in the same way. There is no getting around that. You must think of it that way. And the reason I say that is because that when you start realizing that you are literally just guessing in a game of probabilities, that at any point, even if you have a strategy, which stock lock strategies are proven to have a 70 to 80% win rate, which is wonderful, out of 100 trades, even with that amount of win rate, you will lose 20 or 30 trades out of 100 trades. So with that being said, you don't know which ones, like flipping a coin, okay? Even if the coin was weighted and you know that it's going to flip over on heads more than it will tails, how do you know which one it's going to be? You don't. So that's why you can never place an inordinate amount of money on one trade. I don't give a shit if it's an A plus trade. I don't care if Jeff Bezos himself came on and said that Amazon's going to be worth $10 million tomorrow. You can't do it. You have to the only way you'll be able to stay consistent is just knowing to yourself and in your heart and in your mind that is, even though the setup is there still is that probable chance that this trade will not be the trade that's successful. And when you are able to do that, you will no longer, which is at your fifth question, you will no longer feel disappointed that you've lost money. You will no longer feel disappointed that trade didn't work. The reason you're feeling disappointed now is because you're not taking setups because you don't know them yet. So when you lose, you're losing because of a lack of knowledge and a lack of skill. But when you build that skill and you build that knowledge and you have taken a trade that when you look at it, it has X'd out all of the things that it needed to be. It was in a proper place. It was risked properly. It was setting up properly. And all the market conditions made it right to take the trade. It just didn't work. Why? Because it's a game of probabilities. You can't beat yourself up over it. And when you realize that, and you not just fundamentally, but you emotionally realize that you're just playing a game of probabilities, you no longer feel upset and sad when a trade doesn't work. You just move on to the next trade because all you know is that out of 10 trades, 7 of them are going to work. The other side to that is making sure that your winners are at least 2 to 1. I don't say that generally. I know a lot of people that make a lot of money on 1-to-1 trades. Yes, please take them if that fits into your frame of mind. I try to get at least 1.5 to 2, depending on the market conditions. When September hits again, you'll be able to see that a lot of the moves that we take will offer you 2 to 1. But right now it doesn't, and that's the part of trading. You'll just realize to yourself in your heart, you'll know by watching the market action if you should just take it at a 1-to-1. And as long as you have a 70 to 80% win rate, dude, you'd be a millionaire making 1-to-1 trades. So you'll get into that feeling, you'll get into that understanding, and you will get into that mindset if you just start training yourself to see the market differently. It's really the feeling comes of being a loser on a loss because it's the perception that you have right now. So don't be discouraged by that. It's totally understandable. And once you have gotten yourself into a point where you are confident in what you're seeing and you are really taking these setups properly, you have to just look at it like a slot machine, and sometimes you will win and sometimes you will lose, but you will be the casino in the slot machine aspect instead of being the player, because you will have the edge, and that's really all it is. Trading really is so amazing on so many levels, but it's also so hard on so many levels because there's so many different ways to make money trading that you have to figure out who you are, and you have to figure out what works for you, and you have to figure out what makes sense for you before you're able to figure out where your edge lies. Or you have to figure out your mind so you can duplicate what StockLock has shown us and other people who are honest that show you real setups. You just have to be able to get the mindset that is needed so you're able to execute those trades properly, and you can make money from them. So the live day trading accounts, the TEFS is the only one that I know of, and I say this sincerely, that you do not need to have $25,000 or more to get over the PDT, the pattern day trading rule, which only allows you 4 to 5 day trades in 1 week if you live in the United States. If you live outside of the United States, which I know a lot of people do, sure, there's a ton of different brokers, but I say in true sincerity that until you are able to prove to yourself that you are consistently able to trade properly, I would say go with TEFS because they are the cheapest commissions in the world. I mean, literally, you're not going to find cheaper commissions. And also, when you short stocks in other brokers, you have to locate the shares to borrow if the broker doesn't have them, and they cost money. And it's just, when you're learning, you need to have it as cheap as possible. You can't be spending $50 to get in and out of a trade because you're scaling in and scaling out and you're trying to figure things out. So to me, the TEFS is the only way to go. Here's the thing. I know a few people that once they got consistent and they were using their TEFS and they were able to withdraw money a few times, they just put the money in another broker, and then you can just, flourish on that. You don't have to stick with TEFS, but stick with it now just until you're confident and you know that you're making money. When you've been able to withdraw at least 3 times on your TEFS broker, I'd say then you can really look for any kind of trading broker. And I personally would recommend Interactive Brokers. They're called IB. They're wonderful. They are very fast executions, and they're really, really cheap commissions. But that would be something I would say to do way later on in your trading career. So you also said when you get into a move, it moves slower, it moves sideways. That's wonderful. It's not for you because you are in a early stage of learning, and the learning curve hasn't been there enough for you to see that when you're getting into a move and it just starts going sideways, or it's sideways and you're expecting it to move, a lot of the times I look for moves that are consolidating. I look for the range moves, the ones that aren't doing very much right now. The reason why is because every trend or big market movement will always be followed by a range movement. So if you want to catch the big moves, you have to catch them when they're in range. You have to catch them when they're consolidating. You got to catch them when they're moving sideways. So it's actually a good thing that you're catching these. Now, it's not good if it stays sideways, okay? Now, if you're just catching all range-bound markets, that just means you haven't trained yourself to see when the big moves are happening, which is very easy to do, and don't be discouraged by that. But to feel good and confident, because you could be really close to be getting into these really big moves. You just haven't trained yourself in a ways to see them yet. So don't be discouraged by that. Start training yourself to see what range-bound markets look like. So cool, if you're getting into all these trades and they're going sideways, start trying to tell yourself, what made you get into that trade then? What were you seeing then? What caught your eye to get you into that trade while it was going sideways? Because if you can do that, you can tell yourself to set that stock. Don't jump into it now. Don't trade it yet. See it. Say, oh, okay, it's going range-bound. let me put an alert at the top part of that range. Let me put an alert at the bottom part of that range. And then when it breaks those range areas, that's when you're going to want to get in. Or you're going to want to get in when it looks like it's about to break that range area. So you get in before the move happens, but not front loading on it. Not where you're just getting in, hoping and praying. That doesn't work. You have to have a technical reason why the stock is making a move that could show you that it's about ready to get out of the range. There's a lot of ways to do that. Don't be discouraged by it, but that is something that you could build on, not to be discouraged by. One of your questions was never just go for broke. Okay, no. I think that the losses that you've taken are normal. I think that anybody going through this has all gone through this to some way more major levels in which you even began to do. I think that you've shown an amazing amount of discipline by not just jumping all in and saying, here, let me just, blow the rest of my account. No, I actually think what helped me was my mentor told me about a year and a half ago, he says, listen, Take the intro accounts and take small size on them. Literally, take 10 shares. It's going to cost you more in commissions to take these trades, but what you're doing is you're not doing it to make money. You're doing it so you can build skills to see if what you're trading is making sense for you and if you're able to get okay, here's the thing. So say I took 10 shares of Apple, right? And it just don't do the market leading ones. It's just Apple as an example. So say I took 10 shares of Apple only because I wasn't going by how much am I going to make. I'm going by it just made a double bottom at a key level, at a key daily level. It made a double bottom. It went into it very sharply, which means there was no profit taking in the process. And it allowed me, and I noticed on time and sales that the sales stopped and it actually waited at that level, which means momentum came out of the trade. I had a lot of things that told me that this could be a very good place where I could go to the next structure level, and it could be a solid 60 to 80 cent trade, and my risk would only be 30 cents. So that to me, it made sense. You get in. Excuse me. So if I only took 10 shares originally, okay, well, guess what? You're not going to make a lot of money. I mean, you know what I mean? Like, even if you made $1 a share, you're only going to make $10. If you only make 80 cents, you're going to make $8. After commissions, you've only made $3. The thing is, if you can get past that, right? If you can get past the feeling like, oh, I could have just made 80 cents a share, and if I had 300 shares, no. You can't even think that way. You are not going to do that right offhand. You have to build the skills to see these in order to handle them correctly so you can take a few hundred shares and make a lot of money. But if you can do it with 10 or 20 shares, just so you can start building the skills that it's needed to really take proper share size, like that's what's going to get you to that mindset where you're okay with taking small little paper cuts on these accounts, because you're going to go through a few intro accounts, you're going to go through a few student accounts. And I only say that because everybody does, but if you are able to just paper trade for a while and paper trade it the way you would paper trade your real money, don't go in there and take no 1,000 shares. No. Paper trade the way you would trade with your live account, because then you're building proper skills that you can just transfer to your live account. So I say use the rest of the money in your TEFS account. Use it and only risk $10 on each trade. Literally, risk 10 to make 20. Okay, because then you can have, if you have $300 left in there, you got, 20 trades, you know what I mean? You got a lot of trades that you could use to really build skills. And if you do that and you get into your student account or your next intro account, you might be able to risk $20 to make 40. And hey, let me just tell you, a couple of $40 trades, every other day or what have you. I mean, you could really build on a nice little account like that. So I say absolutely do not go for broke on that. I say be proud of yourself. You were able to keep your money properly so you could use this account for what it's meant to be used for, and that's to learn how to trade. This account is not meant to make you money. It's meant to show you how to trade. And if you use it like that, it really will. And when you get into your student account, you might actually really be able to build on it if you just build the mindset that you need to control them. Also, I noticed you said you keep like a 30 to 50 cent stop. Yes, that's wonderful. However, it really, that aspect of it doesn't matter. You could have an 80-cent stop. If the trade looks like it can give you $1 or $1.50, there's nothing wrong with an 80-cent stop. But if you're only going to risk, we'll say, $10, well, you do the math. You're only able to take 8 shares. You know what I mean? It's the share size that you have to manipulate that makes sense for each trade. Because if you take an arbitrary, well, I'm just going to risk 50 cents in this trade or 30 cents in this trade, you're going to get stopped out all the time and you're just going to lose money, because that's not the way to technically trade as a technical trader, because you have to go by what the charts are showing you where structure levels are in order to trade properly. And also psychologically, you have to kind of keep in mind where you think a lot of stop losses will be. And you just have to make sure that you're putting your stop so you don't get in the midst of all of that foolishness. So, one last question you had. If you look at his videos, will they tell you pretty much where the setups are? Yeah, they will. Yeah, absolutely. I already said that earlier. They absolutely will. But the problem lies is not just being able to see the setup, but the problem lies originally, until you build off of that problem, is being able to execute the trade without emotionally. Hold on.